is Martin from Secret, the channel for learning about trading and investing. Welcome to Friday Market Wrap-Up. So this is for Friday, today, September 30th, 2002. We'll look at what happened at the end of the week today, and we'll have a detailed analysis on the week-to-week basis, giving a view for the next week. And that video would come out only on Sunday, so you'll have to subscribe if you don't want to miss out that. So today is just a wrap of what happened today. So it is a very sharp recovery, short covering rally is what is happening today. Right. Let's get into the details on what happened on Friday, today, and get into the charts. Look at this. This is engulfing pattern, bullish engulfing. That is the latest candle that formed today has fully engulfed the previous candle. That shows the intensity of the bulls, all the bullishness that happened today in the market. Right? And on the Banknifty index, if you see, it's also an engulfing candle, right? An engulfing bullish candle. And when that happens on the end of a trend, don't know whether it's an end or not, but it's at least it's a small retracement pullback. So that way, it's an end of a trend. If you look at it that way, it's probably can be called an exhaustion engulfing candle also. So probably this may be the bottom, but there is no confirmation of that. But generally, when there is a trend pullback or end of a trend, that means a rally towards one side happens, and then an opposite color candle engulfs it, there is every likelihood that the market could move further up. That's what happened today. We're not getting into weekly basis analysis, but the good thing that you can see that it's weekly, although it's third week of downtrend. Now we are seeing a good support with a hammer pattern. Hammer is also indicates the bull pressure from the downside. Right? It's lifting up, and also could be a potential reversal. We don't say reversal, but potential. The possibility of a reversal is there on the weekly basis on the Nifty and the Banknifty. We'll study that in the next weekly review. But this is just a wrap up of what happened today. Let's get into the 15 minutes or 5 minutes and see what happened. Right. So intraday from the morning, it was clearly uptrend, right? Except after 2:30, that time there was some pullback, some profit booking that happened, and then again market caught up with that. That's in the Banknifty that you saw. Same thing in Nifty also. It was trending up. There's no real pullback that happens except from once in the morning at 10 o'clock. But it took the support of the previous day's low and day's low, and then not the previous day's low, the day's low, and then further it continues. And the pullback happened after, as I said, some profit booking towards the end of the day. Same thing happened in Bank Nifty also. Seen that. That's it for the day. So 1.64% of up move, 276. In fact, it went beyond 330 kind of points of up move and then reversed. Some of it was given back to the market. So Bank Nifty also made 1,100 plus kind of move up and then gave something back at the profit booking time until 2.61%, 984 points, big rally. So obviously, when the pullbacks could be intense and could make 3% nearby kind of moves, same way the reversal also would be of that intensity, is what experts say. So that is a good pullback reversal, but we never know what's going to go ahead because we have resistance on the upside. Step by step, all this has to be cleared. Previous swing highs has to be cleared before we get to know whether this pullback is for real or not. But yeah, some relief for the bulls is what we can say. The double top pattern, right? The M pattern, what do we call, is there in the daily charts on both indices. We have seen that. We have been seeing the last every week. And another interesting thing that the bulls maybe needed to know is that it is still not closed above any of the daily emerging exponential moving averages. So the moving average support is still, none of this is there in the Nifty. All of them are lost 20, 50, 100, 200, all the EMS supports. Well, Bank Nifty also 100 and 200 is not broken it, but it maintains that, you can say. Bank Nifty it's in better position with a lot of supports. But Nifty was actually could not close above that moving average. It managed to climb above that. The 200 EMA and all it was able to climb above, but could not manage to close above that. Right? That's what happened. Look at this. Right? This is the 100 EMA that you're seeing. This is a 200 EMA. This is 100 EMA. Yeah. So 100 EMA and was closed, but did not manage to close above it. So that's something that the bulls need to be cautious on. Yeah. So otherwise, it was a very good, reverse and short covering rally that happened today. Look at this level. Nothing has changed from our last day's levels. 170, 161, 72.92 resistances on the upside, 16,660 and 750. That's all. That support zone, and then 16,360 below that, 39,400, then about 39,750. So that's the levels on the resistance upside. Banknifty 37,250 and 36,808. The resistance, these are supports on the downside. Some of them are gaps, some of them are free swing highs or swing lows. Right? Again, all of these levels, detailed levels, we'll do a detailed levels and screenshots of all that in the weekly analysis later. But Bollinger Bands, if you look at the Bollinger Bands, nothing much has changed except that the slip down or the expansion of the downside Bollinger Bands on the Nifty and the Banknifty remains to be expanded. It has not started to contract. We'll come to know about that later. So Bollinger Bands, as of now, it just shows that it has fallen down from the downside falling bands. It does not indicate that we are consolidating or not. Right? Although on the upper side there is some consideration that maybe we'll come to know about that from the Bollinger Bands only next week. Right? Next first few days of the week will say what the volatility bands are talking to us. But as we know, it remains bearish. Momentum has improved as a result today, and both the indices have climbed back from the bearish zones to the sideways zones. You can see that trend is short-term SBA zones, and it's falling. Right? Trend, nothing has happened. Trend remains to be bearish zones, and no crossover has happened yet in spite of big moves in both indices. That has not happened. So the trend does not change that easy. Right? It needs at least 1 or 2 days for the trend. Momentum is of course picked up, otherwise the price wouldn't move up. So yeah, good pickup in momentum. We had pull back almost 11%, 8 to 11% Nifty and Banknifty. That's a kind of reversal that happens. So some relief moves has to happen. That's exactly what happened today. VIX is cool off nearly 6%. It's a good thing. It is close below the 20. Big relief, but still need to be cautious because it's not too far from the 20 and 21 and 22 which we hit last week. Very volatile 3-4 days was what we saw yesterday, and that could happen again, spike up again if the US markets, say for example, does not hold on those levels that they are and make big down moves. No, markets also should, can rise up again. Markets can crash as well. But as of today, it's a big relief that it is close below the 20. Futures YI is showing long build-up and long build-up in the Nifty and the Banknifty both. Levels, look at this, the change. 16,700 is the highest put writing. That is where the dominating side is put sides. Put writing is very large number. With the expiry of October, Sept in the Nifty, 17,500 is the highest resistance that I see. So probably the rally for the next week may go to the 17,500 nearby levels. That's what the rally is about. 37,000 is the highest put writing, and 41,000 is the highest call writing that you see in the Bank Nifty. PCR has also turned to bullish already all of a day, all in a day. 1.15 and 1.08 is what the Nifty and the Bank Nifty put call ratios have improved to in just 1 day's big mega move. Sectorial, all sectors performed today except that FMCG just kind of flat. Right? All the major sectors we're talking about, right? That is pharma, FMCG, auto, whatnot. The major indexes like the metal, the IT, pharma, realty, FMCG, auto, metal. That's what I see. So reality is still bearish. Rest is all fine. It's climbed back to sideways, and pharma is the defensive sector. When the market is falling down, it has climbed to the bull zones, which is others are all sideways. The perform. IT is still also climbed back from the base zones in the sideways. So reality, stay out of that for now. Right? The next few days would make it more clear as to which sectors are getting rotated, what is moving, and all these things. Right? Today, all the heavyweights performed 1 to 3% of move has happened, except TCS was kind of flat. Right? So all of the all others looks fine, right? And the banking heavyweights actually did well, and Infi also climbed back to the sideways momentum, if you see. But as of now, no, um, all the other heavyweights are Reliance is in bear zones. So HDFC is in bear. HDFC is not in bear zones, so it's climbed in the sideways. What else are the heavyweights we have? Let's quickly check on that, right? So, banking stock, ICICI Bank, Kotak Bank, HDFC Bank, all have climbed in the sideways zones, right? But Reliance is having trouble, right? And along with the banks, Infi also climbed in the sideways, but Reliance and TCS and that's it. Reliance and TCS are the other, what is left, and HDFC, the twin brother of HDFC Bank. So those three are still in the various zones. So it may take 1 or 2 days more time to see how the HDFC heavyweights are getting to settle themselves, right? And FIs are selling today. That's another thing. 7th consecutive days of selling. 1,565 crores of selling in the cash happened. DS has been buying very good in the last entire week when there is aggressive selling from the FIs. So domestic institutions supporting 3,245 crores of buying happened, which is a relief. That's what pulled the market today or held the market today, because FIs were selling today also. Crude oil has fallen off a little bit, but yeah, let me just recheck the level of the crude oil. Yeah, it's still below 81, you can say, right? But yeah, still below the 90 levels. It should be fine, but it's made a good correction, now consolidating there. That's what is happening. And if we move on to the dollar index, that's what the top is, but some pullback of 3% correction has happened in the index, dollar index, but still it is a very, very historically high levels of 112.5, and the multi-year low of rupee weakness is what we see, where the USD INR is 81.3. All the small pullback has happened, but absolutely not enough right. So that's where the trouble area, the dollar and the US markets, is where the trouble is. That's what's making the VIX spike to 22 plus. Gold is rising after a sharp pullback, and it's consolidating and climbed back in the sideways for now. S6 is red flag, US indices as of now it's flat red, but you have to see that the Monday morning, the pre-market or the futures data. Let us see it later by the end of the trading day in the US tonight, our time. So there's a good pullback of 21% plus 22 or something. The correction has happened. Is it going to hold it, or is it going to further break down? Is the question that we need to keep a close watch on. Not just us, the entire globe is watching that, I would believe. Major event of the RBI policy was over today. Market seems to have taken it in a positive way. That's the reason probably for today's up move. And it was as expected, interest rate hikes and all that. It's as expected is what I believe, right? Fed speeches are the next week. Some manufacturer PMI is coming. US and India also are next week, so that could create some. If they go too bad or too good, it could create volatility in the markets. Something to keep watching. So there's no view as it's the view coming tomorrow for the weekly view, but today it was a big sharp recovery that has happened, right? Hope this helped you to understand what and where we are on the markets on a day-to-day basis by watching this. And if it helped you in some way, also hit the like button and share to maximum. We have very few subscriptions, so subscribe if you're not subscribed. Thanks for watching. Happy trading, happy learning. Bye bye.